Yeah, boy. Good morning, guys. It's Goose from the Wise Wealth Discord. Coming back at you with another Sunday watch list. It is Monday morning, December 30th. We do have some sell side happening. We were mentioning, how that right shoulder on SPY could potentially be forming. You could see in pre-market, we're down to 588. I could change it. I just kind of wanted to show you guys the gap. But before we dive into the charts, I wanted to show you some of the economic data coming this week. Wednesday, you can see we're closed. We have some PMI pending home sales this morning. Like I said, Wednesday closed. Thursday, unemployment claims. That'll be big. PMI, ISM. Manufacturing's been kind of in the toilet. I think that's what that's about. Measures level of a diffusion index based on surveyed purchasing managers in the manufacturing industry. So yeah, I mean, it says it's red folder. Actual greater than forecast is good for currencies. So if we miss, that wouldn't be good. We'll see. Um, Survey of about 300 purchasing managers asked respondents to rate the relative level of business conditions, including employment, production, new orders. So yeah, I could kind of see how that does matter. I mean, it's only 300 managers in that field, but manufacturing's been kind of in the toilet. So hearing what they have to say and what they're seeing is kind of a big deal, I suppose. But pretty quiet week. Nothing too crazy going on this week. Um, it is a short week, as you can see. We're closed that day, and then I don't know if we came out the official time for Jimmy Carter's funeral. But Jimmy had mentioned the market will be closed the day of his funeral. Could end up on New Year's Day. We don't know. Diving into the charts though, the SPY last week, remember I was saying low volume, we can get this push up. That's exactly what happened. And this was the area of breakdown from the FOMC that we were looking at to become resistance. And as of right now, it does look like it was a pretty big resistance. We're kind of testing those lower ends of, I don't know if I could find the sessions. Lower ends of the range. Bears still have some work to do. If they start to get below 584 or 580, then that's where that gap fill can occur around 575. If they don't hold that, then they're in trouble. But there's another look at it too. If you check out this previous range that it or trend channel that it had, it comes back, it breaks it, and then it retests. And now that it's retesting it, it's getting denied. So we could be in for another late lower. It's still going to be some lower value, but that doesn't mean that we can't move in one direction. This gap fill is almost inevitable, but if that does happen, we have that pretty big head and shoulders that's forming. You have the left head, the right, and it's like it's starting to look a little bit bearish. It is. I know I've been hammering the bull side, but I was telling you, a couple of weeks ago, the divergence on the RSI is telling the overextendedness that we're in, the overvaluations, the possible recession. Like you can go on and on about things that don't look good. Market usually isn't going to completely crash, over 20% if, that black swan doesn't happen. So yes, we're starting to look bad, but then that's when you start to look at the levels below. Like where were levels of consolidation? Where were some big points? It's like you could see right here. So on SPY for the most part I broke down, but there's levels, where you could see that we're flipped into resistance that was turned support. Like this would be a big level if that head and shoulders does play out. 564 might catch itself there. But this trend line break in the head and shoulders, yeah, it doesn't look good. So now you got to look below is like where are points of consolidation? Where are some big support levels? 565, I think, would be my target in the downside. If it does start to break below that, then obviously we have the 200, which has been a very, very strong trend since even that last correction. So if it does get down there, I'm obviously going to be a buyer, a huge buyer. My general rule of thumb, down 10%, in any index, I would love it. So we have plenty of time, guys. You don't have to be too quick in the shorts. We still have the end of the year rally that could potentially happen around, New Year's Day, a couple days after the New Year starts. But January was my target downside, and it looks like it is starting to play out. So I'm not super surprised by this. We just have to see how far and how steep it's going to go. But now that we're in this range on SPY, we're going to want to watch 585. That's broken down 577. Move on to the Qs. Still another lower high. You can see lower low, lower high, and then is it going to come create this lower low? We shall see. This morning it's coming right back into previous resistance, trying to turn support here at 517. Because these dips could be bought up this morning. This doesn't have to continue to keep dropping, but if it does, then you have that downside risk. If it loses the 515, 517 level it's at this morning, then we could start to see 500. This is the daily chart. You could break it down into shorter term things, but we've had these plotted out, these levels plotted out. We came back on Monday last week, and that's where I had good calls. And then when it comes back up into breakdown point of FOMC, it's exactly, you can see almost to the penny of where it's denied. Is like you see these where there's liquidity 1, 2, 3, 4, 5. You can see these points of control where previous support was. Now where's it holding up in pre-market? 1, 2, you can start counting the wicks. I'm showing you guys, what support and resistance is and why we play it. This doesn't look good. You know what I mean? You're seeing lower highs, you're seeing lower lows, but it could still hold these supports. You know what I mean? Obviously, being down, gapping down 1% is not cool, but there's still a lot of support levels for bulls to hold on to. So if this correction does happen and it continues to keep dropping, it's like you're going to expect a lower low here, and there's probably going to be another buy up. It's going to start flagging, and overall, it's still going to probably be some bullish movement. It's just hard to tell, and it's like if you're going to play options like most of us do in the Discord, timing is everything. So that's why you play these short-term levels. But you could start to possibly see a bigger flag portion if we go to create this lower low at the 500 level. It gets bought up, creates a lower high, and then flags out here, and then boom, next thing we know, middle of 2025, we're at all-time highs. Who knows? But that's kind of what I'm starting to forecast. You could see that it is definitely in a downward trend. I could see another leg lower, potential for some good shorts there. IWM, it came right back up, just like we were expecting. That is one that I did lose money on this week. Overall, I still was up like $1,300 this week, but I lost money on this trade where I thought it was retesting, and I posted it in the Discord saying how it still looked constructive because it was in this candle right here. It was turning pretty green. Wonder if I blow it up in the 15-minute, could show it. But I had to break the retest, and then this second candle got me. I was there and had to end up taking a loss here for like 150 or something like that. But definitely a managed risk trade that just didn't go my way. You like to see a break and a retest, and that's exactly what I was playing. Is it retested that, and then it was getting its second candle that was taken off, and that was the day we started dumping. So back in the range, bear flagging pretty badly. You could see that this range was the point of resistance. That's exactly where it got up to and then denied again. So until it breaks out of this bear flag in any way, I don't really see anything bullish about IWM. But if it does come into this 214, 215 range, it's going to be pretty hard not to be a buyer. We're just going back to overall trends. I mean, how long have these been in a trend line? You have the 200 EMA. Yes, this bear flag could break out, but I'm not seeing, how there could be more downside unless, barring any black swan event, stuff like that, where we do start to get into the 10, 15, 20% crash. Still calling for a 10% correction. Like I said, January sell side, I do think that's possible. But by the time the inauguration comes and Trump does get into office, maybe that's the pullback that you want to buy. We'll see. It's a little hard to tell. 10 years and the yields are dropping quite a bit this morning. Not 1,000% sure. No one really is, but I'm just showing you price action in general. Good prices to be buying, good prices to be selling. We could see that things were really overextended here. The RSI was, showing a divergence. Now Apple's starting to get smoked a little bit. This is right about the first level of support, if you want to call it that. We have a few candles there that were sitting there. If it does lose that, I mean, very good point is 250. This is previous resistance for us flagging up. That'd be a pretty good pullback. You could just see some of these charts. I mean, they just up, 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 up. And it's like, it's not that long a time. This is 50 days, we're 20%. Like, Apple is a huge company to be going up 20%. So when this does happen, there's always going to be pullbacks. Microsoft couldn't quite break out of that. It's trying to get out of this huge range. Couldn't hold it either. So now we're back in it. We have the 200-day moving average. Probably a little bit of a bounce there or a reaction. If it does slip below, it might be a little quick down to 410. Still range bound though. I mean, it's hard to tell. Is this bearish? Is this bullish? You won't really know until that huge range is broken. You can see it pretty clearly. Just very sideways action. A lot of touches, a lot of just in between. Is this all, accumulation? It very well could be. Microsoft is arguably a better company than Apple when it comes to innovation and growth rates and margins. Cash on hand, even. I'm pretty sure Microsoft has more. So they could be the leader here soon when all the 401k flows just go straight into micro or Apple right now. It could be Microsoft soon. Maybe this is just a big accumulation phase. That's the overall like bullish trend. Nvidia, that break of the flag, they're at their support now, or what was resistance should be turning support. So that's a big level to wake up to this morning. I don't I say it every week. I can't predict everything, but I can react. So it's like if I draw my line and it's support and it does start to bounce off, that's my reaction to it. IWM, I had a reaction to that break. Yes, I was wrong, but I managed my risk and only lost 150. It's a very small loss compared to some of my wins. I had a couple wins this week for 700. I had one for 500, one for 250. So I had two losses, I believe. One was 120, one was 150. And it's like, yes, it didn't work out this time, but these are levels that you are watching. You know what I mean? This denial right here was the true denial. Where is it slowing up on this trend line where it's trying to create a higher low? So that's why I do these videos. I'm showing you the basin break, the holdings, and it's like when these things do happen, then it's up to you and your strategy and your risk profile to enable that in your trading strategy. I don't want you guys to think, oh, Goose is getting in, I need to get in, or Goose, I'm showing you levels that I'm looking at, and it's like I play my strategy based off that. I'm a breakout trader, so if I'm waiting, I'm not going to be going long until 441. But some people may want to see the 200-day moving average touched, and then they can go long for that. But I'm waiting for the breakout and the going higher and stuff to that nature. Just a quick little tidbit. Some people ask me questions like, "Oh, should I get in because you are?" It's like, a little different. With NVIDIA, a break, what I would like to see is a pretty good day, 137, 135. You got to get above these previous lows and break and retest right now. We'll see. Looks bullish in my opinion. Same with Tesla. Like, yes, it is pretty big, drastic movements, but it's still kind of basing nicely. It kind of gives me that flag, look to it. We'll see if it could hold this point of control at 414. Does lose that, not much excuse me, not much liquidity. It could drop pretty fast at 400 at least, and then 380. You can see that it just kind of was slicing right through. So if the flag does start to look at less ugly, then it might not be very good for Tesla. But I'm still pretty bullish overall, especially after it broke this all-time high. I think this is the dip you want to be buying personally. With Elon in Doge's Department of Government Efficiency and those things that they got going on. Mark Zuckerberg and Meta, he was definitely in big talks with them too. I believe this is always a pretty good long term. So these are corrections and these are pullbacks that you do want to see in a healthy bull market. If it does start to come down to this 547 level, I think that's a critical level. It's back in this range, so very, very well possible. If it does get above 608, it'll be a pretty clear path to all-time highs because it's so close. But is it time to buy the dip? I don't know. Like you could see on the QQQs and the SPYs and the 4 hours that they're starting to form these head and shoulders. They're starting to create lower highs. So I don't know if necessarily right now is time to buy the dip, but I'm pointing out supports that could very well be the bottom. It's like if it comes in this 585 point, even today, or by Tuesday, maybe January 1st, January 2nd, January 3rd, the last days of the Christmas rally are big momentum. With the bulls coming back in and readjusting their portfolios. That's one worry I do have, but I don't know. It's hard. Like, yes, things start to look bearish, but then you look below and it's like, is it really just flagging here? Is it just a short term, like, bearish thing and the consolidate, boom, blow the head off? It's hard to tell. Some of the headlines obviously don't look the greatest. We're starting to lose this back in range. AMD, it finally broke. Did like have its little V shape. Like I said, I like to see it consolidate before it does anything major, but it's a good constructive start. Still very, very bearish. You can see downtrend, downtrend. But to build out some support and consolidate and hold this level is pretty decent. The market does turn around. It was one of the stronger ones on Friday when everything else was down. You could see that it was up. So in a down market, it's finally showing that sellers are probably a little bit exhausted. Maybe it's due for a relief rally, but that's depending on the overall market. The market's got to start shaping up a little bit better. Google's still kind of ranging. I mean, you don't really have anything exciting going on. That's why it's like when you look at the stocks and they're coming back into supports, is it really time to sell yet, or is this the buy the dip opportunity? That's where I'm back and forth on. I'm not bearish yet or bullish. I'm just kind of neutral. Amazon, yeah, they broke down to this flag. They came back, retested it, still denied again. So is it going to create that lower low, or is it going to get bought up around the 216 level that was previous resistance, turn into support, flag up, go higher? These are things I can't quite predict, but I will react to if it does start to happen. I would not be surprised if this dip was bought. You guys know how bullish we've been all year, and coming into the end of the year, it's like, is this just one big, flag and a bear trap? Who knows? Netflix has been bullish all year. This could be another flag, and this could be the best opportunity to be buying. But I personally wouldn't be playing it until it breaks down, the 890 level, where it breaks above the 940 level. There's like $100 range right there on Netflix, but some people would want to buy here, say it's support. I'm looking to possibly short it, if anything, because it's getting lower to the lower end of the spectrum. But those are basically it. Just a quick overview, to give you guys levels to look at, stuff like that. Can't always predict the market and what's going to happen, but you can get a general good idea and then set your levels up so that when I'm at work, I'm watching these levels like a hawk. We're open up right at resistance. This starts to lose it, we're in trouble. We can start to see another leg lower back to 500 on the Qs. If SPY starts to lose this little consolidation area, huge gap below. I know it's showing it right now. If I turn on regular trading hours, huge gap below. So this head and shoulders is definitely kind of scary. Could result in more downside. And it depends on, your risk tolerance, your portfolio, what you're looking at. But these could be dips to buy, especially in IWM down here, 210. Qs, comes into this level around 490, 500. These could be dips to buy. You know what I mean? If you're looking long term, 30 years down the road, these are things you're going to want to buy. And you can sure as hell bet that if the market starts to drop 10, 20%, people are going to be buying that. The good investors buy that. So don't buy into all the fear. Don't be scared and sell everything. But maybe this is a flag. Maybe this is the 10% correction. Who knows? But we're not going to sit here and be super fearful and be scared to play our levels, stuff to that nature. Appreciate you guys for tuning in. Hopefully everyone has a great week. It is short. Remember that. Low volume, most likely. Good luck to everyone. Let's kill it. Comment if you want me to, post any other charts or go over any other stocks. Thanks, guys.